Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. Founded it 22 years ago, way back in 2003, to provide the best technical analysis on the planet. That's my goal. Amazing trade ideas, and of course, the best trading systems on the planet, especially with our latest KISS systems and even our KISS systems mean reversion combination. Again, hope everyone had a nice weekend. It is Sunday, October 19th, and it is in the afternoon here. Futures are not open yet. So anyway, again, these weekend newsletters, if you're new on YouTube, tend to be very comprehensive because, I have time to go over pretty much everything. These weekend newsletters, again, get very deep into technical analysis. They're quite comprehensive, 40 to 50 minutes long. So it's not a TikTok type video. It's meant for those of you who really want to listen and learn and get into the weeds. Anyway, we're going to review everything from the general market, gold, precious metals, which have had one hell of a run, as you know, commodities, cryptocurrencies, our trading systems, and of course, Matt's macro vision long-term swing trade plays, which have had an awesome year. From gold, silver, platinum, palladium, rare earth, you name it. We've had some amazing picks here. So let's get started, guys. Okay, back to the newsletter at hand here. As you can see, we have 7 major sections for the table of contents. Lots to discuss here. I'm just going to go over the big details here. Again, the indexes, as you know, closed positive for the week following that big sell-off we had on October 10th on that previous Friday, where the S&P was down about 200 ES points. So for the week, the Dow was up 1.6%, S&P up 1.7%, NASDAQ almost 2.5%, Russell 2000, same thing, about 2.4%. And interestingly, all 5 trading days last week were within that Friday's big down candle. So it was basically like an inside week from the previous Friday. Okay. As you know, we've been looking for a pullback correction in the markets as far as 2 weeks ago. We finally got that correction late in the previous week on Thursday, Friday. Was that it? We're going to go to new highs? That's a tough question. I can give you, it's really kind of almost 50-50 here, guys. I still lean to more down, but we'll see. But anyway, we've been looking for a wave 4 pullback. The pullback on Friday, October 10th was so strong that essentially it fell into these, long-term support or supply and demand zones. So it's possible we could have just ended at 4 there, but we'll see. What I will say is, so far the bounce last week, it was basically inside the previous Friday, October 10th. It's been very choppy reflexive. So the S&P and triple Qs, for example, it just looks like a bunch of ABCs. I don't really see an impulse, clear 5-wave pattern. So yeah, again, it could even go make a new high and still be a corrective pattern, but we'll see. Now the small caps did make a new high. Now we are starting earnings season, and that is a positive for the bulls because historically the market generally holds up during earnings season. Why? Because a lot of these caps or these companies guide down before earnings season, then they magically beat, especially the big cap tech stocks. So we'll see. Again, it doesn't mean we can't have some weakness the first part of earnings season, and then strength the last part. Remember, a lot of those big cap tech stocks, Microsoft, Meta, whatever, the FANG stocks, they tend to trade in the second half of the earnings season. So we'll see. I wouldn't be surprised the market pushes up to there, but could we have some weakness before? We'll see. Some other thing to watch, banks and financials. We saw some contagion coming into those last week, bad loans, etc. So that was in the news. So we want to keep an eye on that area. The other area I want to watch is the high yield corporate bonds. They tend to lead. They peaked out before the market sold off on that Friday, October 10th, about 2 weeks ago. But they've bounced back a little bit stronger here, so we want to watch those. Of course, geopolitical and government, that's the other dang thing. You got Ukraine, you have, of course, Trump tariffs with China, which is a bigger one, quite honestly. And of course, you have this ongoing government shutdown. All right. Gold and silver have been absolutely insane, historical what we're seeing in the precious metals market. Gold hit a high of 4,400, almost 4,400, guys. Silver hit 53.75, so all-time highs. Absolutely parabolic here. It's just absolutely unreal. Um, so again, you got to be careful trying to pick a top because remember, when things are in parabolic moves, they can go longer and higher than you think is possible. Okay, so that's why you got to be very, very careful. That said, short term, I am seeing weakness in the mining stocks. They look a bit toppy here. They tend to top out first, so we'll see what happens here this week. Matt's macro plays, of course, have been phenomenal. You know, my long-term calls in gold, silver, platinum, palladium, rare earth, lithium. But that said, we finally started seeing a pullback in some of these last week. Not surprising, they've been absolutely parabolic, as you know. Next, item number 2 shows the economic news calendar, what transpired last week. As I already covered, like I said, after that previous Friday, October 10th, when the market had that huge sell-off, the index has recovered. Again, it ended up being all those candles were inside of that Friday, October 10th candle, but you could see the index is closed up for the week. And most of the sectors closed up. There's 21 sectors here. Only drugs were down. Everything else were up. Transports had a big week. Um, Oil services bounced back pretty good. Technology has been strong. Semiconductors have been strong. You know, metals and mining. So pretty much everything across the board there was up. Currency wise, US dollar down about 0.5% for the week. We'll see if it can form a higher low. It's been trying to build a base on the daily. Crypto's been quite weak though. It's been leading to the downside. Now there is some support into these areas, which I'll show later. Bitcoin down about 7%. Same for Ethereum. Commodities, mixed bag here. Again, all the big movement in commodities have been, you know, all these other metals like platinum, palladium, gold, silver, you know, you name it. That's where the moves have been. You know, gold hit, like I said, almost 4,400 last week. It closed well off those highs on Friday, closed at 42.34. Silver closed at 51.74. Again, it was almost at $54 as well. And GDX, the miners, continue to be quite strong. As far as the bond market, we saw rates pull back last week, so we are getting nearer to that FOMC meeting, so we'll see if they continue to move down. Next, item number 3 shows the economic news calendar. Again, remember we are in this government shutdown, so we'll see how many of these news items we get. And remember, we're in earnings season. As I stated, a lot of times, or I'd say most of the time, 90+% of the time, the stock market holds up during earnings season. That said, you know, we're just starting it, so it doesn't mean you can't have some weakness early on. But maybe later on when we start getting some of the big cap tech stocks, that's when you start, you know, getting some strength. Okay, let's move on to the charts. Again, first off, we're going to start with the indexes here. So first image below, item number 4 is the Dow Jones, or I mean is the chart of the 5 key major index, as the Dow at the top, followed by the S&P, NASDAQ, and Russell at the very bottom. So again, quite simply, guys, we've had one hell of a rally from the April lows. By the way, our KISS systems on the indexes have pretty much caught that whole entire trend. But otherwise, we're still holding these indexes are still holding their respective 9-week EMAs. As you can see, that's the moving average here in this reddish color. So, you know, until we lose that, I mean, there's really not much to say, guys. Trend continues. You know, doesn't mean we could have some more weakness here in the short term. Next, chart number 5. Here's the daily chart of the same major indexes. Again, the only difference is last week the Russell 2000 did make a slight all-time high before pulling back. Otherwise, you can see these little channels you can draw conveniently on a lot of these. So far, we have lower highs on the NASDAQ, S&P, and Dow. Next, moving on to the S&P 500 charts. First, just to start with the big picture. Like I said, this is the big picture chart. It contains the secular bull and bear markets of the market. This goes back to the 1920s. And again, we've been in a secular bull market here since, again, depending on when you want to mark that, since either the breakout range here in 2012 from the secular bear market range or the March 2009 bottom. If you count from the March 2009 bottom, we're right around 16 and a half years in this uptrend, secular bull market. Okay. And if you look at the past, again, we don't have a lot of data to go on here, but, you know, conveniently, these last 2 secular bull markets from the peak to the highs, so the one we're at bottom in 1974, the 2020 high, That was roughly 26 years. Okay. And interestingly, that was the same length as the one from the, say, if you mark this from the 1942 lows to the peak here in 66, 67, around 26 years. So history tends to say the secular bull market isn't going to be done anytime soon, but that's just the bigger picture. Again, markets move in these long-term secular bull markets or sideways choppy secular bear markets. The time for to just be long the indexes in your 401k is obviously these secular bull markets, but because they can last for so long, they're kind of like generational. If you miss them, then you may not get a chance to get another one if you don't live long enough. Next. Chart number 7, here's another monthly chart of the S&P. Again, this one just goes back to the 90s, but again, you can see the current secular bull from the 2009 lows. Obviously, no changes here. So, next, chart number 8, here's another view of the S&P. Now, this has a wave count possibility. Again, the issue with wave counts, guys, there's always variations and whatever. But right now, it appears we are working on some sort of wave 5 of 5. So once this completes, we can have a pretty nice correction. Again, wave 5's can extend, but this also supports my thesis that 2026 could be a negative year for the market. So a couple reasons why. First off, guys, we'll have come off of 3 up years in a row. So after 3 up years in a row in the market, odds are more strongly favor a down year. Plus, we'll have the second year of the presidential cycle, which tends not to be as bullish. And thirdly, I think a lot of these economic factors are going to start to come into play. Maybe some of the more of the effects of the tariffs. I think the unemployment rate's going to continue to tick up. So I think we're going to have a trifecta of things that's going to cause weakness in 2026. Okay. Next. Image number 9, here's the weekly view of the S&P, again up 1.7%. We're just working on this wave 5, hell of a move from that April bottom. Not too far away from the 7,000 round number. I think we'll probably tag that later this year during the Santa Claus rally or late fall rally. Next, chart number 10, here's the weekly KISS trend system. Okay, so smart trailing stop still around 6,300. We had remember a few weeks back we had a DeMark 9 there, and we did get a pullback from it before a bounce inside week last week. You could see on that candle. Remember the weekly KISS, it's going to have wider stops because it's weekly. So right down around 63.96. I don't see that being in any danger of getting hit anytime soon, even if we have more of a pullback in the market here, because I do believe we're going to have an end of year rally after that. Next, chart number 10, here's the daily KISS trend system with the mean reversion combination. This is also still long. It went long back here in the 3rd week of April. Okay, it's been long. It got out once and it got back in. Current stops around 65.22, which almost got hit on that last pullback. As you can see, got really, really close, but it's still long. So again, really depends here, guys. If we were to sell off this week, this will likely be hit. Or if we just go up, well, that stop will remain in place. And if we make new highs again or continue going, the stop will just start to trail up. This system chart also shows you the winning mean reversion trades that occur inside the main long-term trend trade. Next, number 12, here's the SPY ETF. Again, you can actually trade this unlike the S&P cash, unless you traded futures. But again, the S&P cash KISS system went long back on April 10th. It's been long this entire time, so it did not get out like the S&P cash daily above. And you have these 5 mean reversion winning trades inside the trade. Okay. Again, you can see that pullback on the previous Friday, October 10th, that big sell-off. We lost that ATR. Notice we bounced back, and we did find resistance at the underside of the ATR there, average true range. That's a 14 length average true range. So that is resistance. And a couple things I'll refer to over time, guys. I have this special volume indicator. It's called better volume. So whenever you get these white bars like this, that's usually capitulatory down volume. And sometimes you need a couple of them in a row, but usually that's oversold selling. And you can see we did bounce up from that. You can see back here in August, same deal. You got oversold. You had a couple white bars and then it would be in a low. And if you actually look back in April at the lows, we had those white volume bars there. Next, Moving back to the standard chart, chart number 13, here's the daily S&P. Now, if you're on YouTube, you're wondering what I'm referring to the numbers. So on our web page based newsletters, they all have numbers on the upper left. Now, you don't see it on YouTube here, but that's what I'm referring to. Anyway, chart number 13, here's the daily S&P. Just a simple thing, higher highs, higher lows, all the way up. That pullback last October 10th basically came down to the channel near the 50-day moving average there in red. So far, we've had a choppy bounce. So again, this is your big support right here. This is your important level, guys. If we break that, well, we're going lower, obviously. But for now, we continue to hold this. Next, chart number 14. Here's the half-day chart. Just a very simple chart showing the 8 higher lows that we've had in this entire uptrend. So that could be your trailing stop. That's also similar to how the KISS systems work. You know, I mean, they get a little more advanced, but they typically move stops up in an uptrend like this. Okay. And so that's still holding. So again, so far a little choppy advance. Can we just go and rally again? Or, is this some sort of wave B and pull back? If I had a lot more conviction here, guys, I would tell you, but it is tricky. And I just want to be honest. But again, the important level is obviously that higher low at 65.50. Next, chart number 15, here's a 2-hour view. You can see that rising wedge we also had going into that April 10th highs, then the sell-off. And you can see so far we're just chopping around here. If this is still a wave 4, these wave 4s can take a myriad of ways. They could be a simple zigzag ABC. They could be a complex ABC, ABCX, ABC. They could be a coil, whatever. So here I illustrate a possible coil-like pattern. Next, chart number 16, here's that 60-minute chart where we were looking for that wave 5 a couple weeks ago. So again, we're either working on this wave 4 here or not, or it's complete. So we'll see how this fleshes out this week. And chart number 17, here's a 30-minute chart. I'm just showing you how choppy this is, guys. So if you look after the sell-off on October 10th, this has been a very choppy up and down bounce. This looks like a lot of ABCs. Bearish view would be we put in a wave B high here, or we can go up again and put a wave B up here. It's really difficult to count 5 waves here. It doesn't mean it's impossible. The only other way would be this is a nested 1-2, 1-2, where this is a wave 1 high. And then this is going to form a wave 2. But otherwise, it looks very choppy to me. Next, chart number 18, here's the 4 time frames with our custom indicators. Again, the daily S&P cash at the top left. You can see how after losing that ATR, so far it's acted as resistance. You could see mid last week on Wednesday, basically tagged it, pulled off of there. The lower time frames, we have the ATR support. You can see we had some support cycles on the 78 where we found support and the ATR. Next, chart number 19, here's SPXU. That's the inverse triple S&P ETF. You did get a nice trade out of it the previous week on that Friday. Again, you need to take profits. Again, because of this very choppy action, maybe, if you got lucky buying that pullback. Otherwise, you could see a potential coil forming here as well. Next, chart number 20, here's the NASDAQ, triple Q's, high performance KISS system with the mean reversion combination. Again, this went back long on April 10th there, just like the SPY. It's still long. It's got a smart trailing stop of 585.40. And just like on the S&P, you can see where we lost the ATR, which is currently acting as a little resistance. But look at all these beautiful mean reversion trades that have occurred inside the trend trade. Okay. We also had some low capitulatory volume last Friday as well, where we bounced from. Next, chart number 21, here's the weekly triple Qs, again up about 2.5% for the week. So we got a big demand zone should we lose that 9-week EMA, but otherwise this has been one hell of a rally off the April lows. Next, chart number 22, here's the daily triple Qs, again just like in the S&P. We bounced off a little demand zone. So far we got a little lower high at the moment. So again, kind of flip a coin. We either rally again to a new high, or this is a wave B lower high and we come down. Next, chart number 23, 2-hour view, just like on the S&P, had that rising wedge going into that previous Friday sell off. So far, kind of a choppy looking advance. Chart number 24, 60-minute view, and chart 25, here's a 15-minute view. Again, you can see Those bounces last week, they all did find support around this demand zone. Here at a little downtrend line to monitor. But otherwise, again, guys, to me, this doesn't look, like a wave 5 impulsive move. It's just up and down, up and down, up and down, choppy. Next, chapter 26, here's the 4 time frames. Just like on the S&P, very similar. The daily up here at the upper left, ATR is your resistance. We've been finding support around the ATRs and support cycle on the lower time frames. And finally, chart 27, IWM small caps. Remember, they've been stronger lately. They did make a new high last week, unlike the other indexes, but they too have pulled off. You had some little divergence here. RSI, MACD. Otherwise, here I added a channel to monitor. Hell of a rally, though, from that inverse head to shoulder pattern back in early part of the year. Okay, moving to the second part of the newsletter, just want to cover some of these indicators. So here's the NYMO McClellan oscillator. The previous Friday, October 10th, when we had that big down candle, this did close below its lower Bollinger Bands. And well, once again, it provided you a buy signal. You could see every time this spikes below the lower Bollinger Bands. Again, sometimes you need 2 or 3, or in rare cases, 4 below the lower Bollinger Band. But usually gives you a trade eventually, and that worked out. Someone commented that the McClellan has been declining with the market going higher, and yes, that's true. Yes, next. Chart 29, here's the VIX. So the VIX, as you know, was basing here. Then it had that big pop on October 10th. It's kind of moved up. Friday last week, a big sell-off. Remember, that was options expiration. So that's also part of that big volume candle. But the VIX, one thing that was kind of pre-warning about that big sell-off on October 10th was the action of the VIX. It was staying uncorrelated with the S&P for long periods of time. You could see it here at the ratio or the correlation indicator. And, normally it only gets uncorrelated for a day or two, but that was a long period of time and it got that big pop. So, next. Chart 30, here's the VIXI. I put out a couple VIX ETF ideas a couple weeks ago, the VIXI and UVXY. They both gave great trades. They had nice basing patterns. You could see the previous Friday rallied up. And then last week it broke up. But if you didn't sell before Friday, you gave up a lot here. So hopefully you took some profits before Friday. Again, Friday was OPEC's options expiration. So, be aware of that. Also, guys, sometimes the market changes its mind or direction after options expiration. So that's another reason why this week could be important. Next, chapter 31, here's the VVIX to VIX ratio. One of the best little trading indicators for given buy and sell signals when it spikes outside the upper or lower Bollinger Bands. Very reliable. This is given a buy signal last Friday, the previous Friday as well, which obviously worked out. Almost got back below those bands again on last week, but it didn't. Some positive divergence here. Next. Chapter 32, here's the S&P versus the inverse VIX. This was another thing that was pre-warning that big sell-off on October 10th, was how the VIX was just completely uncorrelated, and you could see the divergence started there, and then it, of course, moved down. Another way to look at this is the SVXY, that's the inverse VIX short-term futures. Again, when you overlay that with the SVXY with the S&P, you can see the S&P in green here. Notice how they trade very well together, almost overlay on top of each other. Now, when divergences show up, like you see we had there in February earlier this year, then led to a big sell-off. And we had another divergence here basically in late September that led to a market pullback. Now, even here in the very short term, you have sort of divergence as the SVXY made a new low, SP made a higher high, but we'll see what that does. Next, chapter 34, here's the S&P versus high yield corporate. This is another thing we want to watch, guys, is high yield corporate. So this actually gave the most timely divergence. A lot of the other things were diverging for, several weeks or more. This one just started diverging the early first week of October. You had a higher high in the S&P, lower high on high yield corporate, and boom, that led to that pullback. Now, high yield corporate has bounced back here a little bit stronger, so maybe that's a slight positive. Next, chapter 35, here's the 60-minute view of this. You can really see that divergence there that was worn into that market crash, which we got on October 10th. But right now, high yield corporate looks pretty decent here. If this keeps going up, it leads. If this makes a new high, then more than likely the S&P will get dragged up with it. Chart number 36, here's high yield corporate itself. Like I said, it was leading down here a little bit in early October, but it's bounced back here. Now, if this breaks out to a new high, that would be a positive for the market. As I state, it's a leading indicator. Chart number 37, 10-year Treasury yield. This moved down for the week, a little bounce on Friday. Again, nice to see the rates come back or come down. Remember, the market is expecting a couple Fed cuts. And chart number 38, here's the 10-year Treasury yield on the big picture view of the long bond, long yields. And like I said, we are in this secular bull market for interest rates. Okay, that interest rates bottomed in 2020, and they are now in a long-term uptrend. And just like the 1970s inflationary times, conveniently, that's when we saw gold go crazy and a bunch of other commodities, and we're seeing that now. Okay, now rates are coming down here. This 3.5% area, that's a big area. Perhaps we get down to there. But guys, look, if you're thinking about, if interest rates are ever going to come down to 2% or whatever, 3% for homes, I don't see that happening, guys, for a long time. Okay, maybe the best we'll get down is down to this range. And then this is going to be a big support. Longer term, rates should tick higher, and the commodity bull market should go on. Next, looking at a few of these market sectors, chart number 39, here's XLK Technology. Again, very similar look to the Qs, almost really identical. Chart number 40, semiconductors. They've been holding up better here. You got a double top potential, but otherwise, they're quite a bit stronger than XLK. Chart number 41, MAGS. That's the Magnificent 7 ETF. Contains Meta, Microsoft, Google, whatever. But anyway, this broke down on that October 10th. It's bounced back. For now, it's been finding resistance to the little broken trend line, but one thing to watch here this week. That said, Google still looks decent in the Magnificent 7. This was a long idea last week. It broke out of this kind of flag channel, and you could see the pullback on Friday found support there. So we'll see, but this still looks decent. Next, chart number 43, XLF financials. Remember, I've been stating these areas looked weaker, and we had some big news come out with the financials and banks the previous week. Big contagion there, bad loans. So that's something to keep an eye on longer term. Chart number 44, here's the banks sector. Again, you can see how weak it is. Kind of has a little head and shoulder look to it. It's well below its 50-day moving average there. That negative divergence played out. Chart number 45, FAZ, that's the triple inverse ETF for financials. This was also a long idea I put out over a week ago, and it's given a nice trade here. But if that financials banks continue to weaken, this should work higher. Next, chart number 46, XBI, biotech. This has been a super strong area. A little pullback late in the week, but it's had a heck of a move here. You can see almost a one-to-one symmetry move from that bull flag there in August. Next, chart number 47, XLV Healthcare. Nice pullback, but this looks like it's trying to flag out. And remember, the administration made that deal with the pharmaceuticals, so that could push up some of these items. Next, chart number 48, XLP, Consumer Staples. Steve pointed out a little inverse head and shoulder potential last week. Broke out, back tested. That was actually a very low risk area to buy that back test. Still looks really good here. And chart number 49, here's the daily chart. You had a wedge that inverse head and shoulder pattern was coming out, and a little recovery. Finally, chart number 50, here's XLE Energy. This has been quite weak. Remember, it sold off from the supply zone, but also, guys, crude oil has been absolutely in the toilet. So the stocks are actually holding up quite well considering how weak crude oil is. Okay, now it's time for Matt's Macro, and in there I'm going to talk about gold and precious metals and all that stuff. Matt's macro vision. Okay, guys, so Matt's macro vision. So we got a lot to discuss here. First off, gold. Let's do an extensive analysis. So gold has been absolutely fantastic. Made a long-term bullish call back in February 2024. Called for 3,000 plus, and that obviously was well more exceeded. Anyway, been a fantastic bull market. You could see recently too, you had a beautiful coil pattern that broke out in August. That was another buying opportunity. And last week, gold hit a high of almost 4,400 on the cash. unbelievable. It is absolutely parabolic here. Again, it's doing this for good reasons. It's also very concerning and scary to me. I mean, we know what's happened with the BRICS nations. I think the dollar is facing its biggest, you know, attack in our lifetimes, and our probably our parents' lifetimes too. So really scary stuff. Don't know how it's going to all play out, but anyway, it's been in this parabolic move. We had a nice pullback on Friday. You can see kind of an indecision day. Now, again, you got to be careful trying to pick tops on gold because these parabolic moves can go on further and higher than you can imagine. But there is a little signs here that we could be getting close to something. So a little reversal on Friday. So let's take a look. Chart 53. Here's the ETF GLD. Again, this is only saying there could be a little warning here. There's a little symmetry break here. That pullback off the highs just over 12 points versus about 10.75 on the last pullback. So that does favor a little bit of odds at a lower high in the next bounce. Again, if you don't know what symmetry and symmetry break is, you might want to pull up one of my previous YouTube videos on that. But let's take a look at some other deep dive views on gold. So chart 54, here's a weekly view of gold, up 5.9% off those highs. Like I said, we're in this parabola, guys. Wave 3 of 5. So on the bigger picture, some sort of 3. All right. Again, you can see why I picked it as a MATS macro back in early 2024. We were coming on a long-term base. And that's really one of the requirements of MATS macro. You have to have a supporting weekly or monthly chart. And you're coming off of a multi-year base. Okay. This divergence here was blown away. We do have a little bit of CCI divergence. That'll show divergence where, say, typical or standard indicators like MACD or RSI will not. By the way, the RSI I think is the highest it's been ever as well. Next, chart 55. Here's a big picture view of gold going back to the late 90s. You can see this just been crazy, guys. I started following gold back here in 2000, 2001. Man, there was a bunch of metal, physical metal that I owned back then. I wish I still owned. Still have quite a bit, but anyway, you can see the big move in this the last 25 years, up about 1,650%. Here you can see the uptrend line here. I had simply duplicated that, made a parallel channel. Maybe long term it could eventually tag that channel, which hard to say where that is. Could be up in the mid 5,000, 6,000 range long term. Next, chart 56. Here's a monthly view of gold going back to the 1970s. So first off, as you know, gold peaked in January 1980 for 835 an ounce. You can see it formed a very long falling wedge, and we broke out of that in the early 2000s. That kind of started that secular bull. And you can see here recently these cup and handle patterns just been up, and away. Now, the RSI here is higher now on the 14 RSI than it was in 1980 during that peak. RSI is now at 92.3. So again, that doesn't mean that that's a high. It shows strength, but it is higher than that 1980 peak. Okay. Here's another indicator I like to look at whenever you get into really strong trends is this ADX indicator. With the ADX and the plus DI and minus DIs, what you see in these really strong trend moves, the ADX expands, gets really high in the 50s, 60s, maybe even 70s. You can see currently ADX is up here almost at 66. You have a big expansion here, so it just confirms what kind of move we're in. Okay. Now back here in 1980, you could see this peaked up in the 60s. The ADX, the DI went way up here. Then when it came back inside below the ADX, that was a little warning of a top. And then of course, when the negative DI red came above, that pretty much confirmed the end of that market. Obviously, we're a long way away from that, but just showing you the bigger picture here, guys, and that RSI 14 up at all-time highs. Next, chart 57. Now here's a weekly view of the 1980 peak. So you can see 835 in there the first week of January 1980. And you can see it was very parabolic, right? Okay. By the way, I don't have a CCI indicator on here, but there was some CCI negative divergence right at that high. But anyway, here's what happened on gold. It peaked here. You had a big sell-off. This would have been a symmetry break. And what I mean by symmetry break, this was the largest pullback in that entire uptrend. So that favored an end of the move and a lower high. And that's what you got over the next 4, 5, 6 months. Price worked up, formed a lower high, stalled right around that 61.8 fib retracement, and then it became a intraday long-term downtrend after that. But that's usually what happens on a parabolic end. You peak, sell off, you break symmetry, you rally up, form a lower high, and that's where your good short is. Next, chart 58. Here's another view of gold. This is a quarterly view. Here's another thing I noticed. So back in the 1980 peak, gold had closed outside its upper Bollinger Bands 9 consecutive times. Currently, it is closed above its upper Bollinger Bands 8 consecutive times. So, that doesn't mean it has to match that or whatever, but I'm just thought that was interesting. Also, here you can see on the ADX indicator how the plus DI, when it was above the ADX, when it came back below, that typically signaled a high. Notice the ADX is above the DI in green's above the ADX. So when that falls back below, maybe that'll be something to monitor. Next, chart 59. So here's what I noticed. So the gold 1980 peak, like I said, you had your peak, pull back, break symmetry, you formed a lower high right around the 61.8 fib. Notice silver, remember that had a parabolic move last time that peaked in 2011 at just around $50 an ounce. Notice, and I'm using the ETF here just because it shows volume. Notice you had the same thing. You peaked, sold off, you broke symmetry, then you spent months, formed a lower high right at the 61.8 fib. Okay, and that just started a long-term downtrend on silver. So the point is, guys, here's your gold peak in 1980 and silver peak in 2011. Notice how they had the exact same movement. So parabolic trends tend to do this. So that's why I'm wondering on gold here, when we finally do get a peak and a break in symmetry, the next rally, watch for a lower high, maybe around that 61 fib. Next, chart 60, here's GLL. That's the 2x inverse ETF for gold. So last week I was showing a little capitulatory volume and we did bounce late in the week, but certainly it's not saying, confirming any low here. But if you did buy some of this on when I posted this, make sure to have a stop in place. Here, these lines represent symmetry. You don't have any symmetry breaks yet. Next, moving to silver. Chart 61 silver. Again, this almost hit, this got over $54 an ounce last week. Hit a high of 54.50. Unbelievable. Again, you can see the parabolic move here. A little bit of RSI divergence at the moment. We still have yet to lose the 9 EMA. That's where it needs to lose in the short term. Just like gold. Gold needs to lose its 9 EMA. It hasn't done that. And then really on a good symmetry break, you probably even want to see a break of the 20-day. Next, chart 62. Here's silver on that big quarterly 45-year ascending triangle. We did slightly breach above this 50 area. Again, longer term, I believe silver goes much, much higher, maybe $85 over time. But I don't see it going there without some sort of pretty good correction before that. Next, chart 63. Here's SLV at the silver at that 2011 top, which I already discussed. After silver did peak that parabolic move in 2011, notice you broke symmetry, pulled all the way down to the 20-day moving average, then spent months forming a lower high. So that's what I think we could see these metals do when they finally do peak. Next, chart 64, here's the daily view of that 2011 peak. Notice on the daily view, again, you had a little RSI divergence up there. And notice your ADX expansion. ADX got way up here around 60, and then it started turning down and confirming. Next, moving to the mining stocks. Now, these could be giving us an early warning. Here's GDX on the weekly, up 3.9%, but you got a big shooting star inverted doji candlestick here. That looks quite toppy. You had a big parabolic move here. Again, hell of a buy in 2024 down here, but this looks quite toppy. Chart 66, here's the daily view of GDX. We did lose its 9 EMA again last week. Again, it did that recently and we recovered, but we do have quite a bit of air between the 9 and the 20 here now. But here's what's really glaring to me. The stocks tend to lead in the short term via the GDX-GLD ratio. Notice the ratio's moving down, so you have a divergence with the ratio and price. And also you have some MACD divergence here. Next chart, number 67, here's the GDX-GLD ratio itself, plotted these moving averages along with GDX and gold. Again, you can really see this divergence here. Look at this divergence in the ratio versus GDX itself. So really quite telling, giving a warning. And chart number 68, here's GDX itself on the 120 minute. So that pullback off the highs here, about $7.90. That's a clear symmetry break. So I favor a lower high to be put in on GDX now. Chart number 69, in dust, that's the 2x inverse ETF for GDX. You can see got a nice pop on Friday. Now I added a downtrend line here to monitor as possible trigger. Okay. Next, covering some of these other Matt's macro plays. Now again, everything has started pulling back finally. So platinum, remember I had a monster call on this back in April. And finally a nice pullback last week. Certainly well overdue. Platinum's had one hell of a move, guys. So, you got 5 waves here. You got a nice inverted doji. So all these areas could use corrections. Chart number 71, here's platinum on the daily. Again, you made a new divergent high, but notice big pullback late in the week. Again, guys, if you were lucky enough or paid attention and bought this back in April, May with me, you've had a fantastic swing. Okay. Again, decide what you want to do, but I have to lock in some gains here. Next, chart number 72, Palladium was also a very good mover. Even recently, it started coming to life, but it also closed off of its highs. Again, I like it coming out of this long-term weekly base, so I will be a big buyer on any good consolidation. Next, chart number 73, here's the daily. Again, you can see, boom, smacked it down on that daily. So all this stuff's getting a much-needed correction. Chart number 74, Remax, rare earth metal ETF from Matt's Macro in mid-June. Remember, your buy trigger was down here at $40. This thing doubled, went to 80. But you can see it's pulling back off that resistance zone. So next good, maybe ABC correction would be a buying opportunity. Chart number 75, lithium, same deal, was a swing trade on that weekly trend line break. It's consolidating here now after a big move. Some other ones, chart number 76, United Healthcare was a Matt's Macro play in mid-August. So if you bought this puppy around the 300 range, it's had a great trade. It hit its first target here at the gap fill. So 374 that's the first target. Longer term, you got your next price targets above, but I suggested locking in some gains in there. Remember, all these are on our mechanical trade systems in the KISS area. Next, chart number 77, Pfizer. This is one I put out in October because of what the current administration is doing with the drug companies, trying to lower cost. And anyway, what I saw here on the weekly and monthly chart was 5 completed waves. So whenever I see 5 completed waves, I start looking for a reversal. Okay. This also pays a pretty healthy dividend, around almost 7% now. And then the dividend is coming up on, it's coming up, I think, either later this month or November. So you might want to check that. Coming up soon. Next, chart number 78. Here's the daily chart of Pfizer. It's had a pretty good pullback, but this may be an area to start looking at it. I don't have a full position yet on. I've been looking to scale into it. And chart number 79. AMD was another Matt's Macro play. This sucker's up 44% this month, guys. Again, the government came in and or TMC did a big deal with them, or maybe not TMC, but anyway, the OpenAI. But one hell of a move, and this has been a Matt's Macro, for quite a long time. Another one, it's not really a Matt's Macro, is Intel. You had government, I call it government semiconductors. They made a big investment in it a while back, but it's been an easy swing trade too. All right, moving on to the other commodities. Chart number 81, US dollar. We'll look at that first. So for the week, down about 0.5%. But remember, it's held this demand zone here for months. Big sell-off, though, from that supply zone early part of the year. Next, chart number 82, here's the monthly chart. Remember, it's got this 14-year uptrend channel line. It's been trying to find support there. Next, chart 83, here's the daily chart. Again, it's been trying to base out here. You could see last Friday, bounced off the 50-day. You could see how the moving average ribbon was bearishly stacked. It's bullishly stacked now. So I think the dollar could be trying to put in some sort of bottom here in the intermediate term. Next, chart 84, DBC. That's the commodity ETF, but again, it's strongly influenced by energy, and crude oil has been weak, so it's still stuck in this channel here for several years. Jebris 85, crude oil on the daily. It's been very weak, as you know. It's now down to this little support area. See if it holds or not. Jebris 86, UNG natural gas. It's quite oversold here. It's had a good downtrend from the March highs. This also tends to be the year in the fall whenever it starts to bottom out, so could be an area to watch for a trigger long. Next, Jebris 87, DBA agriculture. This has been a good Mats macro from February 2024 as well out of the cup and handle. Right now it's coiling. And chart 88, soybeans. Haven't shown this. One of our subscribers pointed this out. It's forming a big weekly coil here. And I know there's some stuff going on with China and tariffs, and China's not buying our soybeans. So could be one to watch. SOYB, it's a tradable ETF. Next, chart 89, Bitcoin. Weekly view down about 5.25%. Still has this potential wave 3 of 5 look. On an eventual break, this could measure down to the 85,000 range, but for now, it continues to hold this wedge and this demand zone. Next, chart 90, Bitcoin on the daily, nice pullback. It basically led down, but there is a demand zone here. We bounced off on Friday, and here you could also see some of these fibs. There's a 50% fib kind of in the middle of this demand zone. Next, chart 91, Ethereum. This also has been very choppy. It is a long-term long of mine, though. Chart 92, here's Ethereum ETF, ETHU. So far, a nice little kind of an ABC move off the highs. Maybe monitor this 50-day moving average. Chart 93, Ethereum on the monthly chart. Again, this is a Mats macro because I like this longer-term coil ascending triangle that is set up. Chart 94, some of these mining stocks, they've been just in fuego, finally pulling back here a little bit. Remember, a lot of these crypto miners like WGMI and HUT, they were able to take their crypto mining services and use it for the data services and quantum as well as AI. So they've been able to profit from that, and you can see they're reflected in the stocks. Chart 95, HUT, that's the same thing. They do the same thing. Some other stocks, guys. Chart 96, UPS. It's been basing out here, so it has started to bounce here. I own a little position on this, but it's been basing here. Chart 97, here's the weekly view. I mean, it's been absolutely destroyed since the 2022 highs. There is kind of a long-term support here. A little bit of MACD divergence. Chart 98, Amgen, one we mentioned last week, kind of a flag-like pattern. Bounced back a little bit on Friday. Chart 100, Palantir. I'm not sure what you might want to check when this one reports, but you can see sort of a bullish setup here forming. And chart 101, Allegiant. A little resistance here. Broke out of a flag recently. Got a little resistance here to watch for maybe a pop. And chart 102, ADM. Potential long over this high. All right, guys, we'll see what happens this week, and we'll see where futures open later tonight. Again, I appreciate all the support from all of you. I've been around for 22 plus years. Believe it or not, I actually have subscribers that have been with me for 10 years, 15, even a couple guys that have been with me the entire time. And quite honestly, that is absolutely humbling to me. I'm almost embarrasses me that someone's trusted me this long. Anyway, guys, again, appreciate all the support. Please, on YouTube, hit the like button, make a comment. That really helps the channel grow. That's the YouTube algorithm. So anyway, really appreciate it. Have a wonderful rest of your Sunday. Take care.